What's going on, everyone? I'm doing this video here to go over a trade that I took yesterday on NFP Friday, and my plan is to just go top down to cover everything from the framework to the logic, and hopefully you can learn a thing or two, or just in general take something of value from this. So jumping right into it, the first thing that I do every week before even considering the charts is looking at the layout of the economic calendar, and this one was a bit unique in the way that we had non-farm payroll. So the protocol for me personally is a bit different in the way I operate in the charts and the days that I choose to trade. So I'll kind of go through what that looks like and how I structure my weeks around this. For me personally, on NFP weeks, which is usually going to be the first week of each month, I avoid price on both Monday and Thursday, and I'll look for trade opportunities on Tuesday, Wednesday, and post-NFP release on Friday. Now, avoiding Mondays for me is not something that's exclusive to this week. It's just something I do in general because it's not a very high probability day for me, considering the way that I frame my trades. But for Thursday, this is one that I avoid during NFP weeks because since non-farm payroll is such a significant driver in the market and it's weighed pretty heavily, a lot of the times the day before can be relatively accumulated, and then on the release, both sides of the range will be manipulated. So it's pretty favorable not to participate that day when your trades are looking for high probability expansions. With Monday and Thursday now sectioned off within this weekly fractal, you can kind of get an idea and picture what this protocol offers. And if you notice, these 2 days are the smallest ranged within this weekly fractal from the high to low of day. And also the opening and closing prices are relatively similar, which is a sign of unclear formations of the daily candle. Whereas if you compare these to Tuesday, Wednesday, and Friday, there's clear directional order flow throughout the day. And for me personally, this is more favorable to trade. And while a protocol like this is not always going to be perfect, it's not always going to offer you exactly what you want. For me personally, this is a sacrifice I'm 100% willing to make, understanding what the expectations of these days are. And this here is an example of what I meant by I try to lose less and not win more. I'm not trying to force my hand and take wins in these 2 days where my expectation is lower probability conditions. These are days that I'm fully willing to let go of in order to make sure that I'm available for these other days which are offering better price action. Now that we went over the protocol for the economic calendar on this particular week, I can start getting into what the actual framework of this setup was on the chart. So moving on here to a weekly chart, we have this pretty significant level to the left, these equal lows paired with an imbalance. We ran that out last week, so the expectation becomes a run to the upside. And whether that be a retracement into equilibrium of this previous dealing range, or it's a full-on reversal to start taking out these external highs, the expectation is still a run higher. So that's what I was framing my trades around for this particular week. Now with the expectation set on the weekly chart that I'm looking for higher prices, I want to go down to the daily and 4-hour to find things that are going to act in confluence to give me confirmation of this particular bias. This week, price opened up in a previous range and traded internally, which actually formed a consolidation range. And if you were to watch my previous video, we went from a reversal to an expansion to a consolidation. And if my anticipation is a draw higher, the ideal scenario is running out the external low prior to running out the external high, which sets an AMD, which we can actually see here. Monday, accumulation; Tuesday, manipulation; Wednesday, reversal; Friday, distribution. And that's the phases of price delivery that goes in line with what my anticipation on the weekly chart is. And this is also paired with weekly profiles, which is so important, and I can't talk about it enough because this is the time element to daily bias. It's how you frame days of expansion. So when I see a reversal formed on Wednesday, considering how Monday and Tuesday printed on the chart, and with my higher time frame expectation of an upside draw, this is a confirmation when we have an hourly change in state of delivery for a midweek reversal. It makes me more confident to trade away from this low into my draw on price. So just taking a quick step back, thinking about everything that I just mentioned from the NFP protocol all the way down to this weekly profile, I'm going to walk through each day and see how this filters out unnecessary information and low probability conditions. So before even considering this price action, we eliminated Monday's trading and Thursday's trading. And I did mention that I look for trade opportunities on Tuesday, but I do not trade internally to externally from a consolidation range. So now this becomes a day which I am not trading and don't find a trade opportunity, and I just let it go. Now moving on to Wednesday, this is another day that I said I would look for trade opportunities. When I see an hourly change in state of delivery, a Wednesday low, but also a London low, which is a daily profile paired with a weekly profile, this gives me incentive to look for longs during the New York session, which I did take a trade on, and you can see on the screen now. And of course, lastly, looking for trade opportunities post-NFP. If the framework is there, this captured the majority of the weekly expansion and achieved the draw in price. So when you filter price in this way, you can see it leaves you with these days that are expanding towards your objective and towards your higher time frame expectation of price. And I think now is also a good time to talk about why I was comfortable trading away from that Wednesday low and considering it a reversal, when I think a lot of people saw that as equal lows on NQ that should be ran out. And this is where intermarket analysis comes in very important, when you have to look at ES and NQ together as they are correlated pairs and both play relevance into this movement on price. When I see equal lows like this on NQ, I also find it very important to look at ES at that same reference point to see what it did. And here we have an example of an SMT being formed at the lows, where this red dot on both pairs, you can see ES ran out that external low while NQ failed to do so. With an SMT formed at this level, I no longer look at this as equal lows to be ran out before moving higher, but as a point that should actually hold, considering ES already ran through that level, had a change in state of delivery, and with all things considered in the framework that I outlined previously. This also plays into why I chose NQ to take longs into the upside objective. When we have a failure to run that low, this is the stronger pair while ES ran deeper into that low. As you can see, that resulted in price failing to reach that same high that NQ ran through. And it's really important to be on side with the stronger pair when taking longs and the weaker pair when taking shorts, because this is going to result in a lot more expansive price runs to your objective. Now that you have a good understanding of the framework for this week and why I was looking for upside on Friday, I'll get a little bit more in detail of how I entered this trade intraday. When we're tracing off the second standard deviation with the expectation that price will run up to the fourth deviation, I want to look for something within this price range that we're retracing back into to frame a long setup to get on side with this bias. And if you can recall from earlier, I wait for after NFP release to see where it trades to. And since I have the anticipation that this Wednesday low should stay intact, when NFP runs this sell side here, that is the only PD array that I'm looking at to reverse price into my objectives. So when I see that, I want to drop down and look for intraday volatility drivers to help me enter this trade to start seeking expansion. Following NFP release at 8:30, the next volatility driver is at 9:30, which is the equity open for indices. If you can remember a post that I shared not long ago, if there was a manipulation that occurred before the volatility driver, it will act as an expansion. If manipulation did not already occur, that volatility driver will manipulate the range and then return to expansion. So what we have here is, did NFP already manipulate prior to this volatility driver? And I can say, yes, we ran through that low that I was looking for and had a change in state of delivery. So this is a signal that I want to be holding through this volatility driver with the anticipation that it's not going to run back below this low to manipulate my stop loss, and that it will act as an expansion to my draw on price. So when I first see this candle close at 9:05, I'll enter on the following candle. My stop loss will be below this low here, and my first profit target will be the reprice of this inefficiency made from the NFP release. From there, my final profit target is above those consolidation external highs that were yet to be induced, and is also paired with that fourth deviation from the hourly manipulation of the weekly range. With all of that, this is what the complete trade looks like. Quickly, I want to mention, if you are trading in a market condition like this, post-NFP, where the volatility is extremely exaggerated, you can't operate like you usually would. A usual 20-point stop loss, for example, will simply not work in a market like this when the volatility is so extreme. So you have to be willing to adjust if you're going to be trading these conditions. What I always do is keep the same dollar risk, but be aware that I have to adjust my point risk to increase in order to not be manipulated on my stop loss. And if you aren't willing to do that, it's really not worth trying to trade in a condition like this, as a price action would just be too aggressive. And with that all being said, that's all I have for you in this trade review. I hope you found it insightful, and would love to know if you did down below in case I should keep doing these types of videos. Thanks again for watching, and I will see you in the next one.